Collins & Co invite you to join us for our regular lunchtime not-for-profit seminars and workshops. In these sessions, guest speakers deliver expert knowledge on topics specifically catered for the not-for-profit sector. Sessions are held at Collins & Co from 12 till 2 and lunch is provided. Contact Collins & Co to find out the next seminar topic and to register.
My name is Ryk Eksteen. I'm the Audit Principal of Collins & Co. Today I will talk to you about preparing your organisation for audit, as well as talking about common pitfalls I find when auditing non-for-profits. I hope to share with you practical knowledge and tips in how to prepare your organisation for audit.
When he comes to visit you, he's going to be looking forward to see what's working well and what isn't. So I'm going to hand it over to you. Thanks.
Thank you, Michael. Welcome everybody. I'm glad to see a couple of familiar faces as well as a couple of new faces. It's always good to meet new people. Today I'm going to talk about preparing your organisation for audit, as well as common pitfalls I see when I do audits, and then see how we can reduce the cost of your audit. So I'm the audit principal, look after all the audits in the firm. We're the largest firm in the western suburbs, and basically my focus is to basically help the organisations we audit to improve and actually make sure they comply with all the different requirements, and that they actually know where they stand financially so that they can actually deliver the service they're supposed to deliver. What I'm going to talk about is the reasons for an audit, the audit requirements of the ACNC, ASIC and Consumer Affairs Victoria. I'll talk about what is an audit, what is a review, the causes of problems with your auditor, how to prepare your organisation for audit, common issues and pitfalls in non-for-profit audits, as well as a little bit about new accounting standards coming up and already has kicked in already. So I won't go into much length into that because I did like 3 sessions at a not-for-profit conference about it. So the amount of time we got today is not enough. So why would you do an audit? You do an audit because you are basically ensure that you are accountable to your members and to the people that fund you. You do an audit to ensure your income is complete and you're spending the money as you should be spending it. You're also ensuring that the board are looking after the assets of the company and ensuring that it doesn't go missing and that it's well looked after. Audit, we basically check things, we make sure things reconcile, and that whatever is in the financial statement is the liabilities and assets that should be there, and that your income and expenses are appropriately stated. You need to have an audit most of the time when you're a charitable organisation, as well as a lot of time you need an audit for funding bodies. So the audit requirements for the ACNC, the ASIC and the Consumer Affairs Victoria are all basically the same. They just tend to call things a little bit different. So for the ACNC, there's 3 tiers. It's small, which is under $250,000. So there's no obligation for a review or an audit, or really even to prepare accounts, which I think it's not a great idea, but that's what I wanted to go with. Then medium size, between $250,000 and $1 million. So your financial report need to be reviewed or audited. And then large, $1 million up, your financial report must be audited, and must be audited by a registered company auditor. ASIC, as we can see, it's exactly the same, also 3 tiers. They just call it tier 1, tier 2 and tier 3, and the requirements are exactly the same, except for tier 1 you can actually be requested by ASIC or the members to be audited. Even if you don't have to, there definitely can be a request to get it done. Consumer Affairs, same 3-tier structure. Once again, tier 1 to tier 2 and tier 3. It's all the same. Once again, under tier 1, you can actually be requested by the members, by Consumer Affairs, or it can be in your constitution. I think that will probably be like an older type of constitution, and I would expect most constitutions for incorporated associations to have been amended since 2012. If it haven't been, it's something you need to look at. Well, I love this one. Auditors come in after the war and bayonet the wounded. Because that's our job. We come in and criticise what happened historically, and we look at historical information and provide comfort and assurance to the users that that information is correct. But unfortunately, it's all historical. So what is an audit? So audit of a charity provides the auditor's opinion as to whether the financial report is in accordance with Australian accounting standards, if it's prepared correctly under the AC&C Act of 2012, and whether it presents a fair and reasonable view of the charity's financial position and financial performance for the year. It provides a high level of assurance, the highest level of assurance, although it's only really a reasonable level of assurance because we can't check all the balances. You do selective testing, but it's the best type of assurance you can actually get unless you go out and it's the scope of the audit is 100% audit. It will also give you more information whether you have all the information required that you would expect to have when you conduct an audit. It will tell you if you keep good records and also look at your internal controls. Okay, what is a review? So a review provides limited assurance. So what the opinion will be, is there any matters we became aware of that you need to know about? We also look at the financial records and the record keeping, but our work will basically be more analytical, and it will also a lot more inquiry from management. A review can be performed by, I guess, an accountant that got a practicing certificate, but a registered company auditor will actually provide you a bit of a better service and have a better understanding of what's required to perform a review. So what causes problems with auditors? We look at inadequate understanding and the documentation of the engagement. So I guess the client, do you understand what is the scope of the audit? Is that documented in the engagement letter? The timing of the audit is important. Do you have enough time since the financial year end to prepare the financials that you're ready? What is the format of the audit report? Is there going to be a qualification? Does the auditor actually have the correct format and the new format of the audit report? You look at a format of financial report. Are you preparing financial reports under the correct financial framework? So are you preparing a special purpose financial report, RDR, general purpose financial report, or a general purpose financial report? And it's really up to the board to really make the decision whether what financial report is appropriate for the members, but then it's also for the auditor to basically have an opinion whether that's the correct financial report that's appropriate for that organisation. The whole concept of special purpose financial reporting is slowly going out of the window. So I think there's some interesting time ahead. Won't be next year, but probably in a few years' time, there will be no special purpose financial reports. So unfortunately, that will mean is it will push small and medium-sized organisations into applying all the accounting standards, which can be quite a chore depending on what you actually do. And then there's a question about what is the timing of when does the audit report need to be completed? How much will it cost? Are they going to charge you extra when they find a problem? And then sometimes you get unprofessional and inexperienced auditors that shouldn't be doing the job. Okay, let's get to how to reduce the cost of your audit. I guess just from my point of view, I always give my client a fixed fee because I don't like them to be surprised. And the problem that I guess I sometimes get caught with new clients that they're not as well as prepared as some of my existing clients. So then you have issues with having a lot of queries going back to the client, and it really then just adds to the time. And because audit is based on the time you spend, it can become quite an expensive exercise if you don't have a fixed fee. And if you want a quick turnaround and a quick sign-off, it's good to be prepared. I guess as bookkeepers and accountants and financial people, we need to look at the financials and we need to really understand what's in it. Because this is what I do and this is what my staff do. Because we look at every balance in the balance sheet and it's a question, material or not, and ask yourself, should it be there? Because what does that balance mean? A lot of the time, just last week, I had a client that was a new client. They had lovely reconciliations, but some of the super payable went back to 2011. And there was stuff on the reconciling items where you think, okay, you should have cleared it out by now and just make the judgment and clear it out. So really you need to understand what's in the balance and what does it mean. And then should a balance be reconciled regularly or reviewed? And that would be like GST and superannuation, and anything that's like a control account, you need to know what's in it, that you understand, I guess, what shouldn't be in there. And sometimes is the fact that you're not reconciling that balance or the person are not doing that, is actually a problem there. And I think a lot of the things, especially our new clients, which we do audits for, this is the type of thing we do a lot of, is basically clean up the financials and make sure there's nothing in there that shouldn't be in there. And it's just really, a lot of the time, there is historical issues because the balance wasn't material, so it's just been ignored for the last 5-10 years, and that clearly is not a way to go. So, are you ready for audit or not? Audit is all about preparation. If you're prepared, that makes everybody's life a lot easier. In the handouts, there should be an audit information requirements checklist, which is something that goes out to all the clients probably in April, May. And it's basically a roadmap to get ready for the audit. Also, you need to know when the audit's going to take place. A lot of time I call my clients in March, April, and line up the dates for the audit so that everybody knows what to expect. I put it in place. And I also, at that time, I found out when does client want the financials, when does the board need to sign off the financials, when is the AGM, so that we don't put ourselves or the client in a position where they don't have enough time to actually get ready for the AGM. We never want to be in that position. Like I said, everything is about being prepared. If you're prepared, you stress less and I stress less. That's always a good thing. If you do monthly reconciliations, that makes your end of the year audit a lot easier. There's a lot, I think it's painless, it's easy. You don't have to worry too much. There's a few adjustments you have to make because every month you're on top of things. Then as you go through the financial year, you'll find there's stuff that you know you're going to need for the audit. So you realise, okay, there's a prepayment. So make a copy of that and put it aside. You're making a prepaid income, put aside a copy of that agreement. It's really, you don't have to wait till the end of the year to be prepared for the audit. As you go through the year and you realise there's things that you're coming across that's going to be relevant, just put it aside. If it's electronic, make a folder for your auditor so that everything is there when the audit comes around. And if you do have like a paper copy for the year end for yourself, make a copy for the auditor. The less time we spend making copies, the more time we have to actually add some value to the audit, not just trying to rush and get through the day. I don't know if there's any questions on that, on preparation, or sorry, I may go through a bit quick because I talk fast. No questions, Jimbra? I know you're always prepared, so what can
I was just going to say, I think the suggestion of doing it during the year, because that's what I do. Mm-hmm. I have a file set up, I have the same file I use every year. I just file last year's papers, and then as through the year, if something comes up that needs like assets, new assets, I just immediately put a copy of the invoice on the file, so I don't have to go back and look at that stuff later.
So,
I'll probably overdo it. I'll probably put stuff I don't need there too.
It's true. I mean, it's probably better to be over prepared and under prepared. So I know those of you that are my clients, I mean, most of you are very organised, which is great, which I appreciate. But it wasn't that way the first year I was there. And the people that are laughing know what I'm talking about. It's always a bit of fun to walk in for the first time. At the moment, we probably look after more than 100 charities or non-for-profits, so we do see a lot of things that go wrong. And a lot of the time, I think it just comes down to being aware of what can go wrong, and I guess just keeping an eye out, and a lot of stuff can be fixed beforehand, before it actually becomes a problem. Okay, so the verification of ABNs and GST registrations. I guess it's really only a problem where you deal with a lot of subcontractors, smaller organisations. So sometimes they can be a bit dodgy. I'm not saying they are, they could be. Or it also means that you could be claiming GST when you shouldn't be claiming GST. And there's one thing which I find one way which I use a lot at clients. Okay, if they use MYB, then I print a report from the purchases which gives you the invoice per supplier, and it tells you what was the GST treatment next to it. So we just put an eye down that list and see if it's consistent. If something jumps out at you, you look at it thinking, okay, so what is it? What are we looking at? So should there be GST in it or not? A lot of the time it could be water, or if there's food involved. If it's like a food account, I don't get too stressed about it, but a lot of the time you can easily see somewhere where the client either claimed GST and they shouldn't have, or they haven't claimed GST and they should have. Same in Xero. If you run a Xero general ledger or the accounts transactions, on the right-hand side is a column for GST. You do the same exercise and just go through and see, is it consistent? So that's something I do. That's how I pick up most things. Or I also know what goes wrong as well. So the specific suppliers I will go and look for, and there's other ones you'll just pick up doing that consistency test.
Can I just add in there, I don't know if anyone else has had this problem, but last year we got caught on an invoice where we checked when we first started using this supplier, it was a cleaner, and they were registered for GST. And then they must have just gone out they were deregistered. And when the audit came around, the auditors looked at the GST registration and it said no registration. But I was the one who checked it, so I knew that when we started. So now we print it out. So it's extra paper, but it means that we can go, well, when we looked,
although I had an issue where the person was registered and then the registration got cancelled and they got registered again. So there was a period in the year which they weren't registered. So, I mean, you need to look at historical details and see actually what's the history of the registrations and see where they are.
But it's interesting, you would just assume once someone's registered, that's it. But,
yeah, I had a client 2 years ago where the lady cancelled the GST registration in 2006. 10 years later, she was still charging GST. So, which is not great. Okay, issue number 2. So, basically looking at the information on the BAS and then the information in your accounts. So that's why you look at the GST you collect, GST you paid, and you basically, so what happens is in the year you lodge your BAS, and then at the end of the year I come through and I print out the BAS information from your system. I put it into a spreadsheet, which is also in your pack. It's the last page. And suddenly there's differences because you've gone back in the year and you changed an invoice or something, and that changed information. It's always a good idea at the end of the financial year to do a reconciliation for the full year before you actually lodge your June BAS. That's where you can change any differences or do any catch-up you need to catch up on. Yeah, once again, my point about the GST treatment being consistent. So it's really, like I say, that little exercise I do, it's pretty foolproof. Then superannuation, like I said, the client last week did a superannuation reconciliation but didn't do anything with the information. They had super going back to 2012, 2011. And everything now is clean, but they still have the stuff in the reconciliation. So deal with it. Pay the people. Because you want to ensure you pay everybody super. So, and a lot of time I see organisations that don't reconcile their super payable. I think it's a lot less now, the fact that because we have SuperStream and working for the clearinghouse, it pushes people to actually do something about it. But before that, there was a lot of things. Although I had a client early in the year I realised she overpaid 2 quarters because the information she was using from the MYB, I don't know what happened, but something's changed and stuff. So she was just overpaying the stuff. So that's important to reconcile your superannuation. Also had an instance in the past where incorrect calculation of super guarantee. I think this really goes back to, are you sure your payroll information is correct? Is your payroll set up correctly in MyOp, in Xero? Because it's, should I have leave loading? Is there a leave calculation correct? All those things basically contributes to getting the accurate information. This is just something I picked up on a few clients where there's certain boxes were ticked and certain boxes weren't ticked. So I guess where you have a complex payroll and you have people working shifts and all kinds of different allowances and things, it's important to know that you actually got all the right boxes ticked. And then we go back from between GST and then pay-as-you-go with withholding tax. We need to reconcile that. That's something I do every time because quite a few years ago, actually one of my clients, they overpaid their pay-as-you-go by $10,000. I guess didn't pick it up because they didn't do a reconciliation. And the reason for that was 1 month they paid 2 months pay-as-you-go, and the next month they paid net wages over as pay-as-you-go. So they were well in advance at the ATO. So that really basically shows you the only thing that should be in a pay-as-you-go is like the last quarter or last month of pay-as-you-go. If it doesn't agree, go and look for it. Once again, it could be a situation where you made a change to payroll or something shifted in payroll which you didn't pick up at a time, and it will come out when you do this reconciliation, at least at the end of the year. That's at least once a year you need to do that. Okay, fixed asset constructed on land not owned by yourself. I had a client that was nearly bankrupt after I took the fixed assets off their balance sheet because it doesn't belong to them. I think it's really tricky with then talk about leasehold improvements. Is it leasehold improvements? I think it's be very careful what you capitalise with land and buildings, especially we've got some grant money to actually pay for it. So it's really can get a very tricky area. It's something that can get you in a bit of trouble if you're not careful. Journals. Okay. Yeah, so some people love journals. I'm not a big fan. Always trying to avoid journals to any control accounts, bank accounts, trade debtors, trade creditors, because that's where it either means sloppy bookkeeping or it can mean fraud. So I know that some things are difficult, but I guess it's really working out what transactions impact on the bank and how to process that. Inappropriate reconciling items. Yep. So sometimes you look at a bank rec and there's items on there going back 5 years, 6 years, and nobody done anything about it. So stay on top of things. I guess clear it as soon as you can. If it's inappropriate, shouldn't be there, get rid of it. And another thing is direct payment showing as outstanding. The only reason a direct payment should show as outstanding is when it actually been set up in your accounting system before the end of the year or the end of the period, but only authorised after the end of that period, because that way it will still be outstanding and haven't happened yet. Okay, detailed fixed asset register. I think this is something that's pretty common, and I can understand why it's common, because a lot of the time is people move offices, the organisations move around, they don't have the assets anymore, and it comes to a point where the fixed asset register doesn't represent anything close to what they actually have. And My point of view on that is basically you need to have a list of your assets. I don't care if there's a value against it. It comes down to if you have a fire in your building, you need to know what you had so you can claim from insurance. The same with small electronic devices which are just written off because expensed. It's just, especially if you have a lot of them, like a training organisation, or with people that will have 10, 20, 30 of them, you need to know where they are, who's responsible, in whose custody are those equipment, so you can go and find it if you need to.
What did you mean it doesn't matter about the financial amount next? Because I get so confused about computers and mobile phones, about their depreciation. Like,
I think more from a point of view, if you don't have a list that's accurate, if you know for a fact that you don't have a list that's accurate, it's just
making a list.
Then it comes down to what you have. So how many computers do you have? How many things? If something happens in your office, how are you going to know what you have in that office?
Yeah, but why wouldn't you put it? Just so
you can put it on. You can put it on the register.
Yeah.
I mean, I guess you can put it on register at what, $50 and write it off at $50. So you can actually write it off 100% in a year, which you buy it. So you can do that. That way you will capture it. Probably the way to go about capturing it. But I mean, I was coming from a point of view, if you inherited a list from 3 years ago, or probably longer, and you don't know what's in it, it's really then more valuable to have a list that's complete than a list with got values on it. But you will, I guess, put the newer items on as you go along, and at some stage that will catch up with what you got. Okay. I guess it's always a question about annual leave, long service leave, carers leave, sick leave, RDOs. Is it correct? Does it have leave loading? I had a problem in a childcare where they didn't provide for sick leave or didn't provide a big number, and this childcare got taken over by, it was a council one, so it got taken over by a management company. And they had to fork out the money for the sick leave, which was $90,000, and they didn't have $90,000. So I guess it's something to keep in mind, depending on your situation, and I guess where the organisation is heading. If you are going to merge with somebody, that's going to become an issue. If you anywhere where you're going to have to fork out, let's say, sick leave in the future, where it's not for the people that's being sick, it's basically where the organisation structure change. That's something that's really important to keep in mind. Okay, sometimes we record the supplier transactions when it's paid and not when it's basically invoiced. So on the invoice date, so that if you don't use like the accounts payable function in the software, I guess you can always have the problem of duplicate payments, or you're not paying somebody, or you overpaid somebody. I guess I'm a fan of using accounts payable system, especially on an accruals basis. There's a due dates in the software. A lot of the time you can manage your cash flows. There's different things you can do if you actually utilize that function in your software. Then accruals and prepayments. Accruals is that's what I do. I go to the file of invoices paid since June, and I pull out all the ones that should have been in June. It's not hard. So many prepayments, looking at when you go through your invoices, you're coding your invoices and thinking, okay, this is probably a prepayment, let's put it aside. Or I'm paying for a conference, that's the next year, put it aside. Just really, I guess, being aware of what's going on, and that way you can really be prepared and be on top of things when it actually happens. Okay, trade creditors is probably more appropriate for larger organisations where trade creditors are not reconciled to supplier statements on a regular basis. So then you get duplicate payments, you get issues where you don't actually know what you owe. So, I mean, most of the time in small and medium-sized organisations, you'll get the invoice, you'll process the invoice, or you'll pay it and it will move on. But I guess if you have a big supplier, you get a lot of invoices and you pay them once a month, that's a really good exercise to do. I guess invoice numbers not recorded, and that just helps with duplicate entry. If you can find duplicate entries it's all about really that finding errors or finding fraud, just to make sure you're not paying somebody double. And I've seen that happen before as well, so it's not something that doesn't happen. I guess at the end of the financial year, go through your trade debtors accounts trial balance and see what's in it. Are you going to recover the debt? Are they ever going to pay? So is there something you need to write off before the auditor comes in and asks you that question? Or even if you sit down and write, and okay, that's the reason why it's not being paid. And just really have a good think about it and see what should you do about it? Or is there any action you need to take? This is something I see pretty regularly. And then it's probably not it's more an issue from a point of view that where security deposits are not kept in interest-bearing accounts for commercial properties, you're losing that little bit of interest you could have got. You know that money is put aside for you. Of course, a lot of the time it's in a landlord's bank account. It can either be held by the landlord or a real estate agent, but plenty of times it's not where it should be. So it's just really making sure that you get a bank statement for your security deposit, like at least every quarter. Because I had a case in a real estate agent where the person embezzled the property rental bonds. That goes back a while now, but even at that time there should have been in interest-bearing accounts and there wasn't. So it was just, when you look at it, you could actually see what's happening.
Sorry, Ryk, can we actually ask our landlord, the landlord, for the statement where the security bond is calculated?
It should be in an interest-bearing account.
Because that's what the new property is, and I was actually confused as to why they did it that way compared to the previous one, that it was in the interest account, the cash, the bank guarantee account.
So it's either, so a security bond is either the bank guarantee, where you can either have a physical, just a guarantee from a bank, or you can have money set aside in the bank, or you can have money you give to the landlord or real estate agent and say, there's the security deposit and they need to keep it.
Yeah, I wasn't very comfortable with that, but it wasn't my sign-off. But yeah, I think I'm
So it should be in an interest-bearing account in the name. So it should be ABC landlord or in trust for Macaulay. And then it's not in the name of the client. So there's a few things around this. It's just stuff to be aware of, that you don't get caught short or just are unaware of what can happen on that. I think the counter of that is where you then lease out to other people. That's been the case. If you sublease, you're probably going to be the person that need to put that in an interest-bearing account. And that doesn't happen that often.
Right, we've combined, we've got a lot of small tenants, and we've now got a big security deposit account for a lot that we haven't specified.
Which is also a problem.
Yeah, so we get that sorted out. Yeah.
It should be separate, or I guess you need to just work, because it's really about then allocating the interest to which tenant and that type of thing. Yeah, cool. Another issue is the incorrect declaration of salaries and wages on the BAS, especially if we have salary sacrifice arrangements. I think I had 4 business or organisations in 2 weeks. They all had the same thing. They didn't do this right, and you need to declare the adjusted gross wages on your BAS, and that's really what is the taxable income portion is the one you declare. And it happens especially where people don't do a lot of salary sacrifice. So somebody just do a bit of super sacrifice on the side. So it can happen.
Xero actually does the calculation for you now.
Yes.
They've got a new thing in Xero.
Okay.
So I used to have to do it manually. Just push the button.
Okay.
Produces a report, deducts everything that's non-taxable to give you your amount.
You adjust the gross wages, I guess.
Yeah, for BAS and IAS. Yeah.
Okay.
Mm.
And then I think one of the last point, reconciling a standalone software information to accounting software information. That's, I guess I had an issue with a client I took over where it was a childcare and they had fraud in the childcare. And the big problem was they got cash in, that information got processed in the childcare system, And then what was recorded in MYB is the money that was banked or the money that hit the bank. And nobody went through the exercise to see what hits the bank. Does that receipts tie into what came through the childcare system? So it's really, if you have a system like VetTrack, any childcare system, anything that you actually use externally from your accounting system to put information through, you put payment through that, or that's as a source of information for something else. It's always good to do that comparison between those two to see if does that make sense. I always do that to check. Some are easier to do than others, but that's something I always do. So anywhere you use an external system that actually can give you reliable information or should give you reliable information. Okay, new accounting standard. This is a bit of fun. So there's 3 major accounting standards coming up. So ASB 15, revenue from contracts with customers, it kicked in on 1st of January 2018. So that one's already in play. Don't really want to go into detail because I haven't prepared exactly to talk about accounting standards, but there's 5 steps now in order to recognize income from contracts. So you need to have a contract, and you need to have an obligation to perform. You need to work out what is the value attached to the contract. And then you basically need to work out, do you recognize it now, or are you allowed to defer that income over a certain period of time? From ASB 15, what's really important and become really important is the contract. That contract, what's in that contract, is going to basically indicate how you need to treat the income from the customer. So if you get $100,000 from the council and that $100,000 is for you to spend on your organisation from the next year, and they say for the next year, that may not be enough to say it's for the next year. That fact that there's a time there may not be good enough to actually defer income past June. Where it's more, I guess, where you'll be able to transfer income is where you have specific performance obligations. So you get $100,000 to deliver 100 hours of service to your customers. That way, it's a lot more easy to identify, can you actually defer the income? So you need to be specific. Time is not always enough. Then we got leases, ASB 16 leases. That kicks in from 1st of January 2019. That deals with lease accounting, especially for lessees. And that's where you have a commercial lease. And what's going to happen now is you're going to basically capitalize operating leases to your balance sheet. So you're going to have a right of use asset, and you're going to have a lease liability, which you're going to so there's that too, and then you're going to have an depreciation charge in the income statement. You can have a finance charge or interest charge in the income statement, and on the balance sheet side, you're just going to depreciate your right of use asset. So it can be pretty tricky. I'm not sure if I should do another session on that. I did one at our conference in March, and there was a lot of questions on various, I guess, the various variations you can find in leases. One thing about this is you can work it out in year 1. So you got your contract, and you can work out what is your liability and what is your asset. And then in year 2, when you have an increase per the contract, you have to work it out again because things changed. So it's always something's going to move. I do have models that work out leases as well. So I've got an Excel model that works pretty well. That could be helpful for that. The other one is ASB 1058, which is income for non-for-profits. That basically replaces ASB 1004. And basically goes hand in hand with ASB 15. So sometimes if you can't recognize something under that, it will fall under this. And that's where you get something for where the value of the goods you're getting is you don't get it at market value, you get it lower as market value. And that will include peppercorn leases. where you get the building from the council for $1 a year. That's something that can create a lot of problems, because what you need to do now is you need to work out what is the market value of that lease, which who knows what it is. You're going to recognise the net present value of the lease payments over the term of that lease, and the difference you're going to recognise as income. So you're going to have a big chunk of income in the year. You also, the contra for that is a right of use asset, and you're going to depreciate that asset. So you're going to, what's going to happen is you're going to have $1 million of income, and then you're going to have $20,000 of depreciation for the next 40 years. It's one of those things that doesn't make sense. It's written by people that obviously don't do these things. My opinion. So
with the leases, are there any leases now that aren't to be capitalised?
it's like, I think the exception is low value leases, which is below about 7.5, and short term leases is below less than a year. So what on your building, you're going to bring that in. So that's probably going to bring it next year, because it's applicable from 30 June 2019. So you're going to have that lease right of use asset, you're going to have the liability, and that's just going to go. So that in the photocopier? It depends on the value of the photocopier. How much? 20. Yeah, that'll probably go on. So it gets really tricky, or can get really tricky. I do have notes on this, so if anybody interested in some notes, happy to share. So it's all about being vigilant and looking after things and being prepared. So the cost of the audit, if basically an auditor comes in and you have a really messy set of books and everything's a mess, your fee go up next year, because it's so much more work that needs to be done. So, and because the original quote was done on good faith, and you have a certain expectation, doesn't get met, you've got a problem. So it's all about being prepared and working out where the problems lie before the auditor comes in, and working out how to address those issues. And everything, good internal controls and good corporate governance come from the board. That's where it starts from. Starts from the top, because everybody follow your example. Questions?
I was at a presentation on, I think it was about 6 months to a year ago, about the new accounting standards with the contracts.
Yes.
And those, I don't know if they were just scaremongering, because they were talking about multi-year contracts and having to recognise, even if you haven't got the money, the fact that you sign a contract for like 3 or 5 years.
It all depends on what's in that contract and the milestones. It's now working more towards the milestones in the contract. So I guess in the past, a lot of people would have had the idea that, okay, I'm delivering a certain service, and because I delivered a service, I'm going to recognise the income. But in reality, you're only going to get paid when something else happens. So you can only recognise the income when that something else happens.
We're talking about having to put it on the balance sheet as a liability for the 3 years or something. So you actually have to pull. So if you've got at the start of the 3-year contract, you have to carry a liability on it.
It depends on when you get the money.
So is it when they pay the money, or?
It's when they pay the money. So it depends on how the money they pay then interact with the flow of the money. I guess as you earn that revenue.
It's very similar to what we do now in terms of carry forward funds and that kind of thing.
It can be, but I think it's a lot more strict than I think not-for-profits do it like instinctively a lot of the time, but it's a lot more strict on what you can actually do.
I've actually told all the managers it's got to be in the contract.
That's right.
It's got to be in the contract.
Contract's going to change a lot, I think, going forward.
Or I can't carry it forward. Yeah.
That's right, because otherwise you can't. Any questions? Yes, Elizabeth.
One of our major problems in the audit is not on this technical stuff, but in the speed that the auditors get the job done. And I think it's due to our size compared to all the other audit clients that might be paying more or are more important. And you get your allocated week or whatever it is, and then if they miss that, it's 3 months later
That's reality. Yes.
So how do we?
That's about you need to be prepared. It's like I say, I can.
Actually, yeah. Like, I don't
No,
I don't know how to exert more pressure and
Well,
help to
then you
sort
need
of
to change if they can't deliver it when you want to deliver it.
yeah.
Because I can show you my diary now from July till end of September. It's pretty chockers.
Yeah.
And I booked it out in April. So as I need new clients, and I put them in where I need to go and try to fit them in where I need to go.
Yeah.
But really, it's you need to be prepared, because you walk in the door, most of the time got a day for the job.
Yeah.
So that day it needs to be knocked off.
Yeah.
And it's and then hopefully there's not too many queries and that stuff drag on and on and on, and that's when things blow out, and then that's where other things come in the way. It's really
Can I always have issues reconciling my BAS, and I hound Ryk for that all the time, so I try and grab him earlier so that I can have that one ready, so it's not something that he has to do on the day or then follow it up later. So I know that's always an issue for me, so I try and get that a little bit out of the way a little bit earlier than rather than wait.
yeah. So I guess it depends on what you got and what issues you got and how to.
I think ours is very clean. It's just when you miss that window, if the auditors
I can
finish
understand that,
and
because
then,
my clients know they can't shift on me.
yeah, well, it's not me.
No. I'm
Bit of
just.
frustration. Like
I'm just-
I actually used to work for a chartered accounting firm, not in audit but in tax, and so I've been on the other side of that.
Yeah.
And now being the client is so frustrating. I'm like, you know, do what you say in that time.
Yeah, the reality is, so Melissa called you, send me an email in March and say, this is the dates I want.
Yeah.
So I say, great, you're the first person in.
Yeah.
And I booked mine in at the end of the audit last year.
Did you?
I'm always first.
That's true as well. So the people are, and then, but the problem is you can't move then.
Yeah.
Because I go from the big clients and say, lock everybody in, and then the small clients, and work everybody in. And then it's pretty much set. And it makes life difficult if somebody want to move. So I try not to move, but yeah, it is a challenge.
Can we come back to that leasing example? We're renegotiating the lease on our endoscopy centre. So how are we as the lessors going to operate it?
Oh,
Monthly rent?
That's another hour of my time, which I haven't actually prepared much on the lesser side of things. So I need to actually study up on that.
Well, and all
I've done the lessee side of things, not the lessor side of things.
Yeah, but we'll have a look at it because it's a
Yeah.
substantial exercise.
It is on your side. Yep.
Yeah.
No, I understand that. That's fair enough. Any other questions? Cool. Well, thank you for your time. I appreciate you coming out. It's always good to have people here. So thank you.